In Investing 101, Dave Bartosiak of Zacks.com joins us now for a lesson in earnings. Good to have you on the show.
Great to be here as always.
So traders and big-time investors pay close attention to these earnings reports, and we talk about them on the show all the time. So what's the key here? What's the number one thing you do?
So there's a lot to look for in these earnings reports, okay? Because you get a lot of information in a very quick period of time. So first you're going to get the earnings per share for the previous quarter. So that's basically just telling you what the company made over the last 3 months. Then you also got to look at those revenue numbers, because that's not going to tell you just the bottom line, that's going to tell you how much money is coming in. So sometimes a company will come in and they will beat on the earnings, but then they'll miss on the revenue, and then the stock will take a tumble.
So what matters more, the earnings or the revenue to traders?
Yes, it matters. They both kind of matter, but I guess some people. Personally, I like to look at revenues versus EPS, because I feel like your earnings per share is really just how efficient is your management during that quarter, whereas the revenue numbers, you can't really fake it, right? You either have it or you don't.
Money coming in is very important.
That's right, and you could work out the rest of it once you have money coming in, but if there's no money coming in, it doesn't matter how great your management team is, they won't be able to do anything with what they've got so far.
And then third is the company's guidance, what that company is forecasting going forward.
That's right, and oftentimes what will happen is that guidance is more important than the actual number for the quarter, because in a lot of these companies, so if you think like retailers and things like that, you already know a lot of the numbers heading into the earnings report. So rather than the actual EPS and revenue numbers being important, traders are looking forward to what the guidance is and what that company thinks is going to happen over the course of the next 3 months in order to make their trades ahead of that.
Let's do a real world example. Nike is coming up with earnings tomorrow, which is Tuesday. So you're getting ready to trade Nike. What do you do here?
So with Nike, what I'm looking at is, I think, with a huge company like them, you don't typically get huge EPS misses, right? They're pretty much in line most of the time. Maybe they beat by a penny or two. So on Nike, it's definitely going to be all about the revenue to see if they're getting that revenue growth of 8% that they've been targeting, and then certainly the guidance moving forward, because then they can answer a lot of questions that people have about competition from Under Armour on the men's side or Lululemon on the women's side. So that's where a lot of the stress is going to be coming from Nike's report on Tuesday.
Do you think it's going to be a positive report?
So personally, I'm kind of a Nike fanboy, I'll admit it. One of these days, I'm going to be the first businessman sponsored by the Jordan brand, I'm sure. But I think that Nike's going to do well this quarter, because when you're looking at the comps from last quarter and last year, they're not all that aggressive here. And shares of Nike have already come down from $67 down to 52. Now they're at 55. So I think the expectations for Nike are a little bit lower than they have been in the past, and I think they're going to surprise to the upside a little bit for us here.
We'll see what happens. Thank you, Dave, for coming on the show.
Thanks for having me.